Hi there, this is Raghav again. My apologies, since last Thursday I was not able to record any videos for you as I was occupied with my work and I was traveling. So now I'm back to my home now. I will start providing you my regular updates so that you can learn the market moves with pivots. And also, if you have any questions, you can post your questions in the comments, where I'll be more than happy to advise you or share my knowledge. Now, currently, where are we on daily chart based on pivots? So I have these three things. This is RSI and this is DMI. This is something usually I just watch at the end of the market just to see the momentum. Now here, first thing is RSI is nearly at 50. It means there is no momentum on daily basis. So whether upside or downside based on today's input. And also if you see the positive DMI, which indicates buying, is below the negative, selling DMI or negative DMI. Okay, if this blue line goes above this red, then market is in buying mode. So this is on daily time frame. It gives some kind of what do you call confidence when you see that blue line is about the negative DMI, the positive DMI is about negative DMI, and especially if it is about this ADX, average directional index. So it indicates that market is in strong momentum. So currently both positive and negative DMI are below ADX, indicating a flat moves in the market. Now, are these futuristic like pivots? No, these are all lagging indicators, both of them. Now, why I'm sharing this is later today or by tomorrow, I'm going to bring you a new video on how to identify the divergence. Right, just to tell you what is divergence, how you can capture this divergence. Just an introduction before we go into our daily market analysis. See, this is one peak. Do you see this peak? Okay, market has gone up here, this line. All right. So just for a sample purpose, watch this. This is one peak. Now, how is the market going? This is a trend line up, right? Now, how is it going here? Flat to downside. So which means market after scaling this high came down, took support on the central pivot and 20 DMA and moved up for how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, gap up. Despite moving up, the momentum indicator, the buying and selling momentum indicator near this peak from here is at the same level. See here, prices are about the previous peak, but on the RSI, it is at the same level or less. So this is called as divergence in the price. So the price is going higher, high, but the momentum indicator is giving you a hint before market crash that there is a negative divergence. Profit book may start. Please be cautious. This is called as divergence, and divergence can be um, caught in the MACD indicator or RSI indicator or even on ADX indicator. But with RSI, there is a ton of trading tricks which I would like to introduce you. That is for the next video. Right now, let's observe where we are. Okay, market comes down sharply. 20-day moving average is broken, then it comes down. Now, instead of testing the lower Bollinger Band, we see a solid, good, pretty decent green candle last Friday. So which was understood after a sharp downfall, there might be some pullback. Now, how did it fare today? Today, we had around 50 points, 50 odd points gap up, and market has come down. It has not only come down on the daily pivot, it has closed below the central pivot. So for tomorrow on a daily time frame, the next pivot, the tomorrow's pivot for daily time frame pivot, if it sustains above central pivot, you can expect a positive movement. or if it's within the today's range bound or below the central pivot, you can expect a negative bias or a negative downtrend in the market. But however, looking at the RSI, see here again, when the price goes above 60 or 70, 70 is good, 70 and 30. See how the momentum is sharp moves. So when it is in between 70 and 30, it indicates a flat moves. But anyway, we are price action followers and intraday traders. So from intraday perspective, if a daily candle on any time frame at 10 o'clock, 11 o'clock, 12 o'clock, if you just observe and if the price is above central pivot or above today's high, have a positive bias in the market and watch out this 20-day moving average. If the price goes above 20-day moving average, you can expect a solid move. Did not tell that these wicks and today's wick, this is of how many points? 76, 26, around 50 odd points. That is a wick to the previous week will act as a strong resistance for number people. You can watch above 18,026, that is above today's high. We can expect market moving up because you can see here, let me remove the pivots here. When you remove the pivots and Bollinger Band, see here, this is where market tried to take support and broke. So this area, once these wicks are broken upside, you can expect some positive up move. So if you go on a hourly time frame, this is how it looks. Let me remove this. Yes, this is how it looks. This will also act as a resistance while going upside, because after coming here we had one green candle and then it was taken down. So we have 18,098 till 18,098, 18,100. We have good selling areas where market can reverse. Above 18,100 market can go up. So 18,100 should be tested within next few days, maybe within this week. That is my personal view here. Now coming back to hourly time frame, I wanted to show you something here. All right. So I have told you that moving average, 200-day moving average have very good significance in any time frame, 5 minutes, 15 minutes, 30 minutes, hourly. So I mean, of course, as a day trader, we cannot watch this on every time frame, especially I have already told you, we should not mix it with the pivots. So if you see here today, what happened today, 200 MA, the price opened almost about 200 MA and came down. So it's below the 200 MA. So we had throughout the day, we had a choppy day with a negative bias. So another hint for you is if the price sustains about hourly 200 MA, then you can anticipate price moving up till 18,026. So what was the resistance I was talking about in the previous thing? Do you see how significantly this works? What was the first resistance? I said 18,026. So if you go to 15 minutes time frame, where do you see 200 MA? 18,026. Now if 15 minutes 200 MA is broken and sustained, you can expect 18,100 will be tested, or it can go beyond that. I mean, that is how you have to remember things, the levels and the 200 MA. Fair enough. Okay, let's quickly move on. Now this is a 15 minutes. Now how is it developing CPR? So this is very interesting. So we have a little narrow CPR than the previous 2 days. So what does this little narrow CPR indicates? I mean, going by today's understanding, I mean, the way market played out today and where price has closed below CPR. Now assume that tomorrow price opens above CPR. What does it mean? What do we have? 1, 2, 3. This is the second ascending CPR we are having. Ascending CPR always indicates uptrend. So market is in the uptrend. Maybe because of gap down, we are having ascending CPR. But again, we had a pretty big weakness at the top because we have a selling zone here. Market came down here, and also price has closed below tomorrow CPR. Now, if there is a gap up, watch out for CPR like day before yesterday, where it took support and then took off. And one more thing we need to keep a watch is these level. Okay. So consider this as an upside and downside range. We have a descending CPR after two big gap down or two big downtrend days. We are having a small ascending CPR. Does that mean that market has changed the direction? No. You saw today at hourly 200 MA, prices were not able to cross it and sustain above it. So still there is a lot of weakness. Market will be choppy. So you have to trade with caution. So if you remember last Thursday, and even I think, yeah, last Thursday and Wednesday, I had told you if prices sustains below S1 or sustains above R1, expect a rally. So hope you made money last week based on my analysis. It's again a very simple analysis. Watch what I'm trying to give you. This is tomorrow's R1. You know how to put pivots. I have shot in a video. You can see that video how to set up pivots. 17,982.95. Today again it opened above yesterday's high. If there was any strong another indication before I forget what I'm telling, if market was in a buying mode, always range breakout will be a turning point where market can take you to next level. If you have observed today, market fails to sustain above previous day high after the opening candle and came down. So if tomorrow price opens above R1, which is 17,985, or if price sustains below 17,820, that is today's range high or range low, you can expect a high probability trade on either direction. Again, I would advise caution based on today. So today we had a choppy day, and this choppy day may continue tomorrow. But if market is making a decision, the decision will be always made near R1 pivot or near S1 pivot. Understand this, guys. Market will make a decision near R1 pivot or near S1 pivot. I will show you that in a while. Was there any trade today? No. Did I trade today? I traded, but again, I was very busy. My trade was with 1K loss. I could not trade properly, and later on, there was no money at all, so I stopped trading. This is how the day fared. There were some nice, what do you call, not nice. There were, on a volatile day, everything looks nice. If you pick up the signal, say, for example, this one, say, close this. This is the upper CPR. Upper CPR always belongs to bias. And when is the right time to trade the upper CPR? It is always on the first or second time. So this was the first attempt after a sharp break. Market went up and closed. Then market tried to push the price down. This is a reversal pin bar. And then market did go up and came down. I was watching around this time, attending a meeting, and then we had this green candle. I knew if somebody would have entered here, there would be at least minimum 20, but this one gave around 30 points. ATM option from here till previous day high, it gave around 30 points. After that, it was completely choppy, and I mean, seriously, there was no trade. Once I missed this opportunity, I stayed away from the market. So at one point of time, it was around 3,000 loss. Then I recovered with the PE trade and then stopped trading. Now, coming back to so there were few trades which I gave today. Now this is RBL Bank. So morning 9:30, 9:30, 9:35. I get it immediately within 5 minutes, but I do wait for 15 minutes so that we know which side market is going. RBL Bank. All right. So this morning I gave the data around 9:35. All right, 9:35. Just showing you guys so that what is the time here? Cambrilla H4L4 breakout opening 9:35. So you guys should know that I'm not bullshitting here. Where was RBL Bank when I gave this? Watch here. It was at row 15. What was the price? 187.95 when I gave the call, right? 9:35. What is the price RBL closed? 206. How did it fare out? This was a R1 breakout. Where is your R1? R1, previous day high, R1. Previous day was a range bond with modestly in uptrend, and see how it moved. So you have to take the risk. One thing in trading is there's no trade without risk. Every trade has a stop loss. So if you want to trade and make money, you need to understand that when I enter, I have a stop loss. What is my stop loss? Especially near R1 is a good stop loss. You enter here, especially in stocks, the first 5 minutes candle or the previous day high below will be your stop loss. Came here, see market gave a sharp up move in the second 5 minutes candle, came down, then it went sideways. Now this pin bar was the cue, or even after the break of this candle, you could have entered keeping the pin bar below or the first candle or a day's low. Let's keep it day's low as your stop loss. So what would be your stop loss if you entered here? 187, 2.5 rupees. Yeah, for 1,000 or 1,000 quantity, it might be a huge amount, but still understand for 2.5, how much you got? 205. So that is almost 20 rupees. You can calculate the percentage. What time I gave this? 9:35. That after this breakout somewhere here, yeah, on this candle. So it was easy pick to watch and trade. What was the next one? The next one you can observe was DLF. This is no, not this one. R1. Shriram Transport, 10% up. Now again, this is for learning purpose. I don't trade in stocks. But if you want to understand the pivots, I want you to understand the location. Every pivot, including the previous day high low, previous week high low, previous month high low, every pivot is very important. You can add weekly pivot, monthly pivot, but that will make you more confused. Since we are intraday traders, for us, we just need the daily pivots. Daily pivots in the sense the 5 minutes, 15 minutes pivots, and then with CPR, these are the levels. So where does the smart money market decides to make a move? I told you just 10 minutes ago, near R1. This is the R1 pivot. Above R1, market gives a sharp move. Below S1, market gives a sharp move. Now why? And the other common sense you can use it here is, I don't care what happens, we are intraday. See this entire zone, is there anything to stop the price? So there's nothing to stop the price, like previous swing high, previous swing low, previous resistance from the previous day. The previous day was a range bound where market was not able to make a decision. Now on this day, market made a decision to break previous day's range. That's the reason today was a very high probability trade. If you take this big risk, then you have this big reward to you. Remember, there is no trade without risk. Every trade is a risk. If you really want to make money, you need to mentally accept the risk and trade with levels. And there are no better indicators to show you in the market except pivots. Pivots are beautiful levels. Bandhana Bank. So previous day was down from downtrend 10:20 a.m. It kept moving high. So you had an indication that market is trying to reverse in this band after gap down. Now here all we wanted was, these are the white CPR, but we wanted something which breaks previous day high. This is previous day high. This purple is I forgot what set I made. Purple. Yeah, purple is previous week high. Okay. Here, previous day, previous week. When this here price comes down, briefly test the CPR. CPR is the heartbeat. It always acts as support and resistance. Price is coming from the top. It is acting as a strong resistance. Once day high is broken, a brief test is happening near the previous day high. Buyers are buying. See where it go. So usually with this big candle, somebody would enter. Yes, it is right way to enter. What would be the stop loss? You cannot keep this big stop loss. The stop loss should be below the previous day high or previous week high. That's exactly where it tested. Or the previous, the current day high. This high was tested to see whether there will be any buying, and buying happened. And if you had just gone with it, you would have made more money. And similarly, we have a Cambrilla pivots as well. This one I will just show you and then we can close. Aditya Birla Fashion DLF Limited. Okay, let's go for, this is my Cambrilla pivots. All right, Cambrilla, if you follow me, H4 and L4 breakout is a breakout similar to R1 and S1 and floor pivot. R1 and S1 floor pivot. Aditya, what is that? Fashions, right? ABFRL. Sorry. Yeah. R3 is a sell zone, but somewhere yesterday's congestion zone, it takes support. R4 is broken. R4 acts as support. See how it goes. H5 and below is a true breakout. You just went berserk. So we'll take one more example and then we'll close this video. DLF Limited. R4. See, R4 is a breakout. Boom. So understand the pivots. I'll be making more videos using pivots, but you have to put in your due diligence. Like any new profession, learning a method or a particular way of trading needs time. Be patient with yourself. And while trading, guys, understand the beauty of trading is it involves losing money. So it creates greed and fear. So trade it less quantity at the right location. So can you trade in between? No. If you trade here, your stop loss will be below this candle. If you trade here, your stop loss will be below. If you trade here, your stop loss will be below. Likewise, in pivots, if you trade near CPR, okay, below this itself is your stop loss. The upper CPR is the right location to trade. The previous day high or previous week high is a right location to trade. R1 above is a right location to trade. Look at here, after breakout, your stop loss will be below R1. R2 above is a right location. But can you trade in between? I advise not to trade in between because that is not the right way of trading. If you really want to master pivots, please pay attention to the location, and then you come and challenge me and tell me that option buyer cannot make money. I will show you how to make money in option buying. That's all I have got today, guys. Thanks a lot. Have a good day. I keep sharing my views. Please support, share, and provide your comments. You can criticize my comment as well if you're not able to understand my language, or if you feel I'm doing some mistake. Definitely share your feedback. I'll try to improve on it. Thank you.